Today, we are going to talk about gross profit. So what is gross profit? Gross profit is the amount of revenue after your cost of goods. So, we have here the mathematical formula of gross profit. So, sales minus cost of goods equal the gross profit. So, if you're wondering what is cost of good, cost of good is the amount it costs to produce or procure a product. So, what is produce and procure? Si produce, siya si manufacture. Si procure naman, siya si buy. And siya rin yung si distributor or a store owner. Pwede din si retailer or online seller. So, how to calculate a cost of good? Kapag kinakalculate mo yung cost of good, tapos manufacture ka, ang gagawin mo, i-add mo si cost of labor, cost of materials, and shipping. Pero kapag ikaw naman si store owners, ang gagawin mo, i-add mo si cost of product at si shipping mo. Yan lang yung gagawin mo.
Okay, let's proceed to the formula in solving the gross profit ratio. In the formula, the following formula equation is used to compute gross profit ratio, and this is the gross profit ratio formula. An example: gross sales is 1 million, sales return it's 90,000, cost of goods sold it's 675,000. So the solution: the basic components of formula of gross profit ratio are gross profit and net sales. So, gross profit ratio is equal to net sales minus cost of goods sold. Ito. So, kailangan na to pangitawon si net sales. So, kailangan na to i-minus si gross sold o si cost of goods sold. So, muna ang total. I-minus na sa duwa. So, dili sa ikaduha, atong pangitawon si gross sales. So, kailangan na to i-minus si net sales o si cost of goods sales. So, muna ni siya ang total. So, the ratio is computed by dividing the gross profit figure by net sales. So, muna ni siya ang total. Ang total ato sa net sales og sa gross sales kay muna ni siya i-divide lang nimo silang duha, then muna ni siya ang total. So that's it.
So di ba kaganina natakil ni Gicale kung saan paggamit ang formula sa gross profit ratio, di ba mao ni siya ang formula. And then, karon itakal na po nato kung saan pagkuha ang gross profit and ang net sales. So, nare na ata example. Diri sa may left side na ay particulars and under ana niya is opening stock, sales, and purchases. And then, sa tapad na ay amount. Diri na po sa may right side na atay another particulars and then lahi na po ang under niya. Tapos, sa pikas, amount na pod. So, karon unsa ko nato pagkuha ang net sales? Net sales sa atong unahon. So, para makuha nato ang net sales na ay dire kanay mao ni siya ang ato ang gamiton. Sales minus sales returns. So, ang amount sa sales 200,000. So, i-minus nato na siya sa amount sa sales return na 20,000. So, kanay 200,000 minus 20,000 equals 180,000. So, mauna na siya ato ang net sales. Kani, 180,000. And then, karon, para makuha nato ang gross profit, kailangan makabalo sa amount sa cost of goods sold. Para makuha nato ang cost of goods sold, mauna ato ang gamiton. Opening stock plus purchases minus purchase returns minus closing stock. So, kani, ang amount sa opening stock is 35,000. So, nara. And then, i-add na to siya sa amount sa purchases na 80,000. So, mao ni siya ang equals 115,000. Tapos, ang 115,000, i-minus na to siya sa purchase returns na 6,500 kani. And then, ano siya ang kinalabasan, 108,500. Karon, i-minus na po nato ang 108,500 sa closing stock nga 15,000 pesos kani. So, 108,500 minus 15,000 equals 93,500. So, kani, mauna ni siya ato ang cost of goods sold. So, para makuha na to ang gross profit, minus na to ang net sales ug ang cost of goods sold. Diba ang net sales nga nakuha na to kaganina is 180,000. And then, i-minus na to siya sa cost of goods sold na 93,500. So, kani, net sales na 180,000 minus 93,500 na cost of goods sold equals 86,500. So, mauna na siya ito. Gross profit. Gross profit na 86,500, i-divide na to siya sa net sales na 180,000. Tapos, after na to siya ma-divide, i-times na to sa 100. So, 86,500 divided by 180 is 0.4805556. Tapos, i-times na po na to na siya sa 100. So, kani nga amount times 100 equals 48.05555556 or 48.6. So, kani 48.6 mao na ni siya ang ato ang gross profit ratio.
And thank you for listening. I hope may natutunan kayo.
So, our next topic is about operating margin. So, what is operating margin? It is the measure of how much profit a company makes on a dollars of sales after paying for variable cost of production such as wages and raw materials, but before paying interest or tax. It is calculated by dividing a company's operating income by its net sale. So, next is So, like what I've said kanina, operating margin is a profit of companies make on a dollars of sales. Katong bago pa magbayad sa interest and tax. Then, operating margin is a profitability ratio that shows how much profit a company makes from its core operation. Third is operating margin helps investor understand how a business makes money. It is generating income primarily from core operation or other means such as investment. And lastly, an increasing operating margin over a period of time indicates a company whose profitability is improving. So, pag taas imong operating margin, so may possibility na mulambo pud imuhang business. A company's operating margin is also known as returns on sales. It is a good indicator of how well it is being managed. So, kung taas imuhang operating margin, meaning how ka magpadagan sa imuhang business. So, para mas masabtan ako siya, na ako ipakita na video.
The operating margin is a measurement of the proportion of a company's revenue that is left after paying for variable cost of production. These costs can include wages, raw materials, or anything else that is not a fixed cost. A healthy operating margin is needed in order for a company to be able to pay for its fixed costs, such as interest on debt. To calculate a company's operating margin, take their operating income and divide it by net sales. Operating income is the amount of profit profit left after taking out operating expenses, such as cost of goods sold or wages, and depreciation. These are earnings before interest and taxes. Net sales is the amount of sales generated by a company after any returns are deducted, as well as allowances made for damaged or missing goods and any discounts. Dividing operating income by net sales provides a snapshot of how much a company is making on each dollar of sales. If a company's operating margin is increasing, it's earning more per dollar of sales. The higher the margin, the better. It is important to note that, as is the case with most business measurements, a company's operating margin should be compared with that of other businesses within the same industry.
So sa video, nakita na to ang formula sa operating margin. So it is operating margin is equal to operating income divided by revenue. So according sa video, ang operating income is amount of profit left after taking out operating expense and depreciation. So unsa ang operating expenses? Mo nito siyang mga good of solds, wages, mga variables, cost of production, or kato mga not fixed cost. While ang revenue or net sales, mo ni siya ang amount of sales generated after returns are deducted and allowance made. So, mo na siya. So, para mas masabtan na to ng example. Give the example. So, diri makita na to na nahatag na niya ang si operating earnings or operating income and si revenue. So, operating earning is $4,000 na siya diri. Then, ang revenue is $30,000. So $4,000 divided by 30,000 is 0.1333. So, nga mag-times sa og 100 because, diba, sa pinakauna na i-discuss na ko, ang operating margin is profitability ratio. So, ratio means percentage. Pwede nimo siya mo ang percent. So, mag-times na og 100. So, 0.1333 times 100. So, mo na siya, atong answer is 13.3%. So, example pa, mahatag po tag example para masabtan. If Christine Jewelry Store sells custom jewelry to celebrities all over the country, Christy report the follow numbers on her financial statements. So, cost of goods sold, 500,000. Net sales, 1 million. Rent, 15,000. Wages, 100,000. And other expenses, 25,000. Here is how. So, nganong 36,000 ang ato ang operating income sa taas. Diba? Ang operating income, mauna siya tong profit left after taking out mga expenses. So, ang ato ang profit dariya is ang ato ang net sales, which is ang 1 million. So, kani si cost of goods sold, si rent, si wage, o si other expenses, i-plus na to na siya. So, pag plus nato niya is ang mugawas kay $640,000. So, i-minus nato ang si net sale sa 640,000. Mauning gawas ni si 360,000. So, mao na siya. Then, 360,000 divided by 1 million is 0.36. Pwede po na to siya i-percent. Pwede na to i-times sa 100. So, 36% siya. As you can see, Christie's operating income is 36,000. Net sales, all operating expense. So, muna siya. According to our formula, Christie's operating margin is 0.36. This means that 64 cents of every dollars of sale is used to pay for variable costs. So, diba, 36%. So, 100 minus 36 mo na 64% daw ato ang gikuan sa mga not fixed. Mo na atong gibayad sa mga not fixed cost o mga variable cost of production. Well, only 36 cents remains to cover all the non-operating expenses or fixed costs, which is ang interest and taxes. So, give pa ta og other example. So Walker Printing had revenue of 150,000. Its cost of goods sold was 55,000, and its operating expense such as payroll, overhead, and research expenses are 50,000. Walker Printing would calculate its operating income as follows. So perahan na siya ganina, di ba? Na wala man gihatag si operating income. So i-minus nato si net sales or ang revenue niya 150 sa mga variable cost of production, mga not fixed cost, which is ang mga goods na tag 55,000 and 50. So 55,000 plus 50 is equal to 105,000. So 150 minus 105 is equal to 45,000. So mao na siya. So di 3 na ta, i-divide na nato siya. 45,000 divided by 150 na net sales is equal to 0.30 or pwede na to siya i-percent na 30%. Next. So next example is a company has $1 million in sales and 500,000 in cost of goods sold and 225,000 in operating cost. So kani si 500,000 and 225 mo not fixed cost man ni siya, kailangan nato ni siya para makuha nato si operating income. So i-plus nato ni siya 225,000 plus 500,000 is equal to 725,000. So kani si 725 kay i-minus nato siya sa 1 million. So 1 million minus 725 is mo ni siya 275. Nakuha na nato si operating income. Mo ni siya 275. So kani sa operating income i-divide nato sa net sales na 1 million. So ang equals is 27.5 or 27.5%. So in conclusion, this company makes 0.275 before interest and taxes for every dollars of sales. So, ano siya ang conclusion niya. So, ang next kay mag-discuss pa si Baron about sa mga example.
Operating profit is calculated by subtracting all COGS or cost of goods sold, depreciation and amortization, and all relevant operating expenses from total revenues. Operating expenses include a company's expenses beyond direct production costs, such things as salaries and benefits, rent and related overhead expenses, research and development costs, and etc. The operating profit margin calculation is the percentage of operating profit from total. For example, a 15% operating profit margin is equal to $0.15 operating profit for every $1 of revenues. Another example, a company has $1 million in sales, $500,000 in cost of goods sold, and $225 in operating costs. In conclusion, operating profit margin is equal to $1 million minus $500,000 is equal to $500,000. The $500,000 minus $225,000 is equal to $275,000. The $275,000 is divided into $1 million equal 27.5%. Therefore, this company makes $0.275
or 27.5% before interest and taxes for every dollars of sales. This is another example of operating profit margin. Income statement for 2014, 2015, 2016, and 2017, and 2018. The revenue of 2014 is 102,007 pesos. And the cost of goods sold, or COGS, is subtracting by the revenue, which the result of gross profit, which is 62,984, and expenses is salaries and benefits 26,427, rent and overhead is 10,963, depreciation and amortization is 19,500. Operating expenses is total of 56,890. The gross profit and operating expenses is subtracting, and the result is operating profit. The operating profit of 2014 is 6,094, and the operating margin is 6%. In 2015, the revenue is 118,086 pesos. The cost of goods sold is 48,004 pesos, and the gross profit is 70,082 pesos. The expenses is salaries and benefits 22,658, rent and overhead 10,125, depreciation and amortization 18,150, and the total of operating expenses is 50,933, and operating profit is 19,149, 70,082 pesos in gross profit, and 19,149 operating profit is divided, and the operating profit margin is 16,000. And for 2016, revenue is 131,345, and dividing by 31,058 centavos, and 2017 is revenue 142,341, and operating profit is 39,122, and operating margin is 27%. In 2018, 150,772, and operating profit is 41,325, and the operating profit margin is 27%. Always remember that operating profit margin is finding the percentage of every company's in every sales in the year.
Net profit margin.
Net profit margin is a financial ratio used to calculate the percentage of profit a company produces from its total revenue. Net profit margin also ka-equal lang siya kung pila ang net income or ang profit na ma-generate siya as a percentage sa revenue.
So guys, may example. Sa ka-company, analyze na to. Na sila sales 100 million, then ilang total expenses kayo 80 million. So, unsaan pagkuha ang net income ani, i-minus na to ni ang sales ug ang total expense, mahimo na siya og 20 million. So, ang profit margin ani is 20 million. Asa gikuha ang 20 million ani? Ang net income ug ang sales atong i-divide. So mao ni 20 million divide 100 million times 100. So mao ni iyang answer. Ang 100 million divide 20, ang answer ana nila i-times og 100, then mao ni 20 million. 20% ang
Mao ni atong example sa net profit margin. Net profit margin is equal to total revenue minus total expense. Bali, ang atong total revenue diri is 75,000 ug ang atong total expense is 25,000. I-minus lang na sila, so ang answer is 50,000 or net profit is equal to 50,000. Pag isolve na nato ni siya, mao ni atong formula. Net profit margin is equal to net profit over total revenue times 100%. So, ang atong net profit is 50,000. I-divide lang siya sa total revenue, which is 75,000. Pag i-divide na siya, atong answer kay 0.66. I-times pa jud nato na siya sa 100. So, mauna ni atong answer, 66.66%.
Okay, we're now down at the last part of this group reporting activity, which is entitled Return on Assets Ratio or ROA. So the question is, what is ROA? ROA is also known as Return on Total Assets. It is the rate that a business receive by the use of its own assets. It shows how a company earns using all of its assets. It simply reveals how efficient the ability of a business to recover the money that the owner invested in his or her assets. It is one of the way to compare two businesses within the same industry. But by the use of this, you could tell whom is the efficient one between two businesses within the same type of industry. For example, between two refilling stations, you could tell whom is performing and earning a lot of money between the two by using the formula of return on assets ratio. Take note, guys, that a higher ROA or return on assets ratio indicates that the business is completely utilizing its assets and none of it are being wasted. It also indicates that you're earning a higher net income, which is good for your company or your business.
So for today, we will tackle about the return on assets ratio formula. So the return on assets ratio is equals to net income over average total assets. So the return on assets ratio formula is calculated by dividing net income by average total assets. So this ratio can also be represented as a product of the profit margin and the total asset turnover. So if you want to dig deeper about this return on assets ratio, you can use this formula, the profit margin in the total asset turnover. If you want to make an analysis about this ratio, so you can use those formula. So simply add the beginning and ending assets together on the balance sheet and divide by 2 to calculate the average assets for the year. So in getting the average assets, we need to add the beginning and the ending assets on the balance sheet and divide it by 2. So and the net income can be found on the income statement. So of course, net income can be found on income statement. So it might be obvious, but it is important to mention that average total assets is the historical cost of the assets on the balance sheet without taking into consideration the accumulated depreciation. So in short, the average total asset doesn't include its depreciation. So wala pa siya depreciation na occur. So we have here example number 1. So Charlie's Construction Company is a growing construction business that has a few contracts to build storefronts in downtown Chicago. Charlie's assets as of 2016 is $1 million and his assets in 2017 is $2 million. During the current year, Charlie's company had net income of $20 million. What is the return of assets ratio of Charlie's company? So Charlie's company wants to build a storefront in downtown Chicago. So we have here the given. So we have the net income of $20 million and a total assets of 2016. So akong gibuhat is ako na lang ninggi December 31 para may mo siya 1 year para makuan siya na 1 year. So 2016 is total assets of December 31 2016 is $1 million and the total assets of December 31 2017 is $2 million. So i-input na to ang mga given. So $20 million net income over $1 million plus $2 million divided by 2. So first is we need to maneuver the parentheses first. So $1 million plus $2 million is $3 million, and then $3 million divided by 2 is equals to 1,500,000. So $20 million divided by $1,500,000 is equals to $13.3. So in order for us to get the percentage of this is we need to multiply it by 100. So 13.3 times 100 is equals to 1,333.3%. So that will be our return on assets ratio. So as you can see, Charlie's ratio is 1,333.3%. In other words, every dollar that Charlie invested in assets during the year produced is $13.3 of net income, depending on the economy. So this can be a healthy return rate no matter what the investment is. So investors would have to compare Charlie's return with the other construction companies in his industry to get the true understanding of how well Charlie is managing his assets. So if ang investor gusto niya na i-compare, so pwede niya i-compare ang duha ka construction company para makita niya kung unsa ang mas lamang na company sa iyang kuan sa investors.
For the second example, pretend Sam starts his hotdog stands and spend 1,500. It's a peso unit po. Spent 1,500 pesos on a bare nonce metal cart, assuming that it is the only asset he deployed. At the end of the month, he received an income of 250 pesos. So let's proceed to the solution. So the given is, since he has a 250 net income per year, so we should put 250 per month rather, so we should put 250 per month. And then the average total assets, or the total assets that sum invested, is 1,500 pesos. So since the formula is net income divided by average total assets, it should look like this one: 250 over 1,500, or 250 divided by 1,500. And if you calculate that using a calculator, or you can calculate it in your mind, the answer is 16 point. The exact answer is 16.6666%, but you should round it off, and it will become 16.7%. Now, it's safe to say that Sam's business will survive since he has a 16.7% income in every month. It means that by the next 6 months, the total money he invested in his assets, or his asset, will be recovered or get back to him.
So here we have the example number 3, or the last example. So we have here the company MV and company DC. So our net income in company MV in 2019 is 8.3 million, and in 2018 is 5.6 million. And the total assets of company MV, so we have a 90 million in 2019, and 2018 is 80 million. So in company DC, we have net income of 5.7 million in 2019, 3.6 million in 2018. So the total assets would be 45 million in 2019 and 30 million in 2018. So first we will be getting the return and the ratio of company MV. So don't mind this 2018, because we will only be getting the year 2019 ratio. So we have here, so company MV, so input the given. So 8.3 million is our net income over 90 plus 80 as our total assets of 2019 and 2018 divided by 2. So 90 plus 80 is equals to 170, and 170 divided by 2 is equals to 85. So 8.3 divided by 85 is equals to 0.98, and in order to get the percentage, we need to multiply it by 100. So the product is 9.8%. So dili na to kalimtan na unahon na to pag-maneuver ang parenthesis para dili ta malibog or dili ta mamali sa atong answer. So next, nakuha na nato si company MV. Next is company DC. So we have a net income of 5.7 million. So input the given. So 5.7 over 45 plus 30 and divided by 2. So 45 plus 30 is equals to 75, and 75 divided by 2 is equals to 37.5. And now divide the 5.7 and 37.5. So 5.7 divided by 37.5 is equals to 0.152 multiply by 100, so 15.2. So we dili na to kalimtan na in order to get the percentage, we need to multiply it by 100. So we have here, so interpreting, so assuming that the companies operate in the same industry and economic environment, so it can be concluded that company DC did a better in managing its resources to generate profits. So all in all, so company DC got the better in managing the resources or the assets na makakuha sila og profits. So mas advantage si company DC. So that's it for our report, and thank you for listening. Bye.